I'm Deborah Borchard, and this is your midday market update. Well, what's happening? The dollar. The dollar is rocking. It is strong as can be. And now we normally talk about stocks here at the stock exchange. Right now we're going to talk about the dollar because it's affecting a lot of other things. I'm here with David Williams from Strategic Gold. So normally you talk about gold, but we're going to talk about the dollar because it affects so many other things. And particularly right now, it's affecting the price of oil and obviously the price of gold. But it's got, implications on a lot of parts of the market, right?
Yes, absolutely. And the dollar has been strong, and it's been getting stronger in recent days, I believe, just because of weakness everywhere else. And so we are the strongest vis-a-vis China, vis-a-vis Europe, Australia, Japan. Obviously, everyone is weakening their currencies. Everyone is saying that their economies aren't that strong. And so people look to the U.S. and you look to the U.S. dollar and say, hey, we're not doing too badly.
Well, like I said, that certainly affects things because now we're seeing the price of oil come down, and certainly that will hopefully eventually trickle down to our pumps, and we'll have to pay less at the pumps. Of course, that's a very slow lag time.
That would be fantastic. I actually think that is it's going to help our economy and in the long term and help us. I think that's going to be a good benefit, and we'll probably stay like this. However, it's a lot of talk right now, and maybe people are getting ahead of themselves with the trade into the dollar because we still are printing money. We're still involved in QE. It's still happening. So how strong are we really?
David brings up a good point because a lot of what's happening with this talk of or with the actuality of the dollar being strong is that there's a lot of talk that the Fed might back off on their easing with such a strong dollar. But again, that's just talk. And if they did it, it wouldn't happen for a while.
Well, and it wouldn't happen for a while, and it would definitely happen gradually. So it would all depend on employment numbers. It would depend on the strength of our economy. It would depend on inflation rates. There's so many factors that are involved in it. So it's nice that people are talking about it, but we've been down this road before, and they haven't stopped the quantitative easing programs.
So are you seeing a big rotation into the dollar? Are you seeing people running after that right now?
I think definitely there's a big rotation into the dollar. And it started with Japan and the Japanese yen being debased. And now we see that China may be having some debt issues, and so they might be easing a little bit. Europe says that they weren't easing for a while. Now they are trying to pay off their debts. They're talking about easing interest rates, that sort of thing. The United Kingdom has definitely been down that road, and Australia is going down the road. So really, it's worldwide. They're all talking about it. We are just keeping on the same policy, and so we're the strongest of what's happening lately.
All right, well, there you have it. We're the prettiest pig in the pen right now, and that dollar seems to be rocking it out. That's David Williams from Strategic Gold, and I'm Deborah Borchard with The Street.